This is your daytime update, and as we continue with our build-up towards the Finance Minister's budget speech, let's discuss now what is top of the agenda for foreign investments and foreign investors. What exactly are they anticipating from the Finance Minister Mboweni's budget speech? I'm joined now by Peter Attard Multato from Intellidex. A very good afternoon to you, Mr. Multato, and thank you so much for your time. What is the business fraternity, foreign investors, what will they specifically be looking out for today?
Well, I think the key issue really here comes down to one implied number from the budget, which is how much National Treasury is going to be issuing each week in terms of debt. We currently have about 6.6 billion rand auctioned of South African government bonds every week. The market, which is looking for that to fall by about 1 billion rand a week or so to around 5.5 billion. And that's really encapsulating a lot of things going on. The better revenue outlook that is expected, the drawdown of the huge cash stockpile that's been brought up this year. So it really comes down to one number. But of course, underneath all of that is a lot of issues around credibility on the public sector wage bill, credibility on SOEs, etc. But that is the one headline number that ultimately markets looking for, so that people can justify some of the rally in bonds that we've seen in recent days.
We heard the president in his State of the Nation address once again affirm the fact that it is business that is going to be the driver of the creation of employment. What would investors want to hear regarding that from this particular budget?
Well, core fiscal, which is the point in the budget overall, can do very little on this front. We should remember that fiscal consolidation, credibility around the funding path, sustainability of the fiscus is important for business sentiment. It is important for the doing business environment. But overall, there's no real scope here to be offering things like incentives for green investment or anything like that. The budget is so stressed underneath it all that there's no room for that. I think we need to remember that, even though the budget is doing somewhat better than maybe the MTVPS, we're coming from a really, really low base, not just because of COVID, but because of the long-term problems, long-term widening of the hippo's mouth over the last decade, the long-term inefficiencies in terms of expenditure and the allocations of expenditure, which are suboptimal, both from a business climate and from a social point of view as well. So there's very little scope really to do that. What we are expecting and hoping to hear is a lot more from the minister about Operation Vulindlela. That's the new sort of super powerhouse joint venture between National Treasury and the presidency, trying to drive through reforms. We heard a little bit about it at the SONA and looking for some more about it today to really drive through those reforms that are going to improve the doing business environment and raise growth.
You spoke there about the importance of government expenditure, and we do know that repaying a lot of the debt is going to be a large part of that expenditure. What is the link between government's debt repayments and the interests of investors?
So we're still on this steep upward sloping path in terms of the debt service costs as a percentage of GDP, coming from about 4.7 or so percent of GDP this year, rising up to about 6%. At the end of the coming 3 years that the budget will look at. And that is gobbling up, if you like, more and more of the domestic savings base, if you like, because new debt is having to be issued to ultimately pay for those debt service costs. That's the crowding out effect that goes on, that keeps the yield curve very steep, keeps funding for businesses very expensive as well. And this is the core sort of metric of sustainability of debt levels that investors, the rating agencies at the IMF ultimately looks at. You can run much higher debt to GDP, over 100% even, if your interest rates are 1%, but the average interest rate on South African debt is currently around 6.5% for their debt stock. The longer end bonds, of course, much more expensive, closer to 10%. So really it comes around your ability to carry all this debt. And South Africa is not in a position like developed markets of having very low interest rates on its government debt.
All right, we'll leave it at that for this afternoon. Thank you so much for your insight and your time as we look at some of the investor expectations from the Minister of Finance, Mboweni, who will be delivering his budget speech in just about an hour's time at 2 p.m. Do stay with us. This is your daytime update. We will be bringing you that coverage live when it begins.